$1.7 billion, and this was also lower than was being forecasted. Now, for exports, we're looking at a figure of about $303 billion. That represents a growth of about 2.4% on an annual basis. That's significantly lower than 8.7% growth that we had seen in the previous month. This figure for September is also the lowest we've seen in 5 months when it comes to the growth. Now, through the first 3 quarters, exports have grown by about 4.3% on an annual basis, which is actually a tad better than was being anticipated up until a few months back. Now, coming to imports, China's September imports totaled about $220 billion, and that too resulted in a weaker than expected 0.3% growth rate on an annual basis. That's down from August's 0.5% growth rate. For the first 3 quarters of the year, imports have grown by about 2.2% year to date. Now, essentially what this does indicate is sluggish domestic demand. Many categories in case of imports such as agriculture, steel and cosmetics have continued to see contractions, and the sectors which are seeing strong growth are those that are prioritized by national policies. So for instance, semiconductors, high-tech imports, automatic data processing equipment. Like you said, this data too sort of bolsters the need for stimulus. In what form and when that takes place remains to be seen.
Thank you very much for joining us with those details. Now moving on, Avenue Supermarts, the parent company of grocery retailer D-Mart, witnessed a 14.2% year-on-year increase in its standalone revenue, whereas margins missed estimates. But what is the street saying about the stock? Mahima and Anushi join in with the bull versus bear case on Avenue Supermarts.
So since the stock is down almost 9% now, so I think I'll start first with the bear case. Well, in terms of why the stock is tanked so much, rates on the back of the Q2 numbers, it's missed estimates on all grounds and weak quarter overall for D-Mart. Now, a couple of things happening. The highlight of the results was that management has said that impact of online grocery formats is now visible. So their like-for-like growth is being affected overall with the rise of quick commerce and e-commerce. And overall, if we see the like-for-like growth has been around 5.5% for Q2, which has been around 10% overall in FY24. And the D-Mart Ready business has also seen a growth of 22%. But overall in FY24, the growth has been around 24% for D-Mart Ready, Anushi.
Right, but now if you look at it, Q2 numbers clearly a miss across estimates if you're looking at. But you know, one thing which clearly stands out is their general merchandise and apparel business. Now, if you go back to our last few quarters, we have been seeing a sort of a weaker commentary on this, but now that has started picking up. In fact, the company saw about a 17% growth here in this quarter as compared to a 15% growth that it had registered in FY24. And the good thing about this business is its higher margins, obviously. So this higher margin is obviously a factor that one should be considering as we move forward for Avenue Supermarts.
Right, but you know, the kind of pressure is not just on the profit and loss, it's also on the balance sheet. There has been high capex investments that have been made, you know, on the back of land acquisition and store expansion overall, and the net cash position has decreased from 1230 crore in Q2 FY24 versus that of 400 crores in Q2 FY25. And overall working capital days has also gone up by 3 days, Anushi. So balance sheet position is also not looking very nice for D-Mart as of now.
Well, you mentioned about the balance sheet metrics that one should be looking at. You know, there has been a little bit of tension about how the company is doing across its key metrics or operational metrics, but if you look at its average basket values, now that has remained stable as compared to FY24 also that we are coming at. What would have been a concern if we had seen a reduction in this, then it would have warranted on how is the revenue growth going to fare for the company going forward. While we did see a revenue miss in this quarter, but this is still a comforting factor for the business as we move forward in the new quarters coming by, and obviously this metric will remain as an important point to watch out for.
Well, Reliance Industries is set to announce its second quarter results today. Analysts expect the company to report a net profit of around 18,800 crore rupees and revenues of 2.35 lakh crore rupees for the quarter ending September 30th, 2024. And Mihika joins in with more details.
a weaker expectation in terms of financial results on consolidated and sequential basis. Analysts expect the consolidated EBITDA to fall for Reliance Industries in Q2. As per Bloomberg estimates, while revenues may rise 2.2% quarter-on-quarter, EBITDA could fall 5.4% on a quarter-on-quarter basis to over 40,438 crores. Margins may contract 120 basis points due to this to 17.2% versus 18.4% a quarter ago. When you talk about the expected segment-wise performance, well, standalone business, which includes the OTC and upstream oil and gas company, and contributed around 53% of the consolidated EBITDA in FY24. Well, O2C EBITDA is expected to fall 26 to 27% on a year-on-year basis as per Motilal Oswal as well as Nuvama, and this could be due to the weak refining segment where the benchmark Singapore gross refining margins fell 62% year-on-year during the quarter. When you talk about the retail segment, well, Prabhudas Leeladhar expects profitability to be resilient, and Nuvama expects the EBITDA of this segment to grow 7% year-on-year due to a 10% rise in retail area. Lastly is the Geo. Well, the segment is expected to post strong and a steady quarter and will benefit from the tariff hikes that were announced by the company during the quarter. Nuvama expects the EBITDA to rise 12% on an annual and 6% on a sequential basis, and growth will be mainly driven by a higher average revenue per user, which the brokerage expects to see a 5% uptick in.
Well, HCL is all set to come up with its second quarter earnings today, and Haripriya joins in with a look at what we can expect from the tech major.
HCL Technologies will be announcing its second quarter results today. It is the second company in line to do so after TCS announced its results last week. HCL Tech's revenue is expected to grow by 2%. Bloomberg estimates suggest that the revenue will stand at around 28,637 crores. Profit is expected to dip 4 to 5% as the growth in the software business is expected to be sluggish, and the divested State Street BPO revenues won't be considered anymore. According to analyst estimates, profit will be at around 4,061 crores. Margins, however, are expected to inch up. Last quarter, it was at 17.1%. With a little more improvement this quarter, it is estimated to be at 17.8%. The revenue guidance provided in the last quarter was 3.5%, and EBIT margin guidance provided was 18.9%. Analysts expect for these metrics to stay the same and not change for the future. TCV is expected to get better as the management was positive on its deal pipeline last quarter, and last quarter it stood at 1.96 billion, and it is to be watched out for how it moves ahead. The company had hired 1,078 freshers. With the sector seeing a hiring revival, HCL Tech is also expected to add more jobs in this quarter and also have a positive projections in terms of new jobs.
Well, Hyundai Motor India is set to hit the bourses with its IPO on the 15th of October. Now, the car maker is looking to raise 27,870 crore rupees, making it the biggest IPO in India. Now, this will be the largest IPO globally in 2024 as well. And this also makes it the first automaker to list in India in over 2 decades. Puneet is joining in with the fundamentals of the Hyundai IPO.
Hyundai Motor India is looking to raise roughly 27,870 odd crores through an IPO, and the IPO will be open for subscription starting tomorrow till the 17th of October. Based on the company's price band of roughly about 1,865 rupees to 1,960 rupees per share, the indicative market cap of the company will be around 1.59 lakh crores, and investors will be able to bid in 7 shares per lot and will be able to do it in multiples thereafter. The company is offering roughly about 14 crore shares via an offer for sale, and there will be no fresh issue as part of this particular IPO. The company has also said that roughly about 4.2 crore shares will be based on the anchor book allotment, which makes it to roughly 8,000 crores odd through the IPO, which will be raised through the anchor book, which is happening today. Roughly 35% of the IPO is basically fixed for the retail investors. And if you look at the company's sales growth, the company reported 7.7 lakh units of sales in FY24, which is a growth of about 10% compared to the previous year. When you look at the financials of the company as well, the company reported roughly 70,000 crores of revenue, while their EBITDA margins came in at roughly 13.1%, which was higher to its peer, someone like a Maruti Suzuki. Profits as well came in at roughly about 6,000 odd crores, and the company, while speaking to NDTV Profit, did mention that new launches will be followed by in the next year, with the Creta EV expected in the Q4 or FY25.
Well, it's time for an NDTV Profit exclusive now. State panel on GST compensation cess held its first meeting earlier this month. Now, the panel debated extending cess as a levy or a tax, and among other things also considered recategorizing luxury goods under the 28% GST bracket. Let's get in Shrimi now, who actually broke the story and has more details on this.
Yeah, so 10-member panel which have been formed by GST Council recently met and have discussed, a couple of options as a way forward of the compensation cess regime, which is coming to an end by March 2026. What we are picking up from our sources is that the GOM, led by MOS Finance Pankaj Chaudhary, discussed that whether to have, additional levy in place of compensation cess or to subsume this cess as part of the standard rates of the GST on the different items. In fact, they have also discussed the recategorization of the luxury items, which currently attract 28%, and whether it should be moved out from the 28% bracket to the standard rates, which is 5%, 12%, and 18%. Remember, the compensation cess regime was introduced soon after the rollout of GST in 2017, and in fact, it was extended for another 5 years till March 2026 to repay the debt which government has taken during the pandemic year, which is about 2.7 lakh crores. So now the estimation says that by January 2026, government will be able to pay all the debts which they have taken during the pandemic to compensate revenue deficit state, and the remaining 2 months, which is like February and March 2026, the collection will be, equally distributed among center and state, and that call needs to be taken by this state panel in its meeting, which is expected, and the final report, which is expected by December 31st.
All right, Shrimi, thank you very much for that. Now, 3 flights departing from Mumbai received bomb threats, leading to major disruptions in air travel. 2 of these flights were operated by Indigo, and the third one was an Air India flight. And Aditya is joining in with more on this. Hi, Aditya. Aditya, it's a bit much for one day, isn't it?
Yeah, exactly. It was quite an unusual day at the Mumbai airport today, because there were 3 bomb threats, because of which 3 different aircraft got delayed diverted. And basically what happened was, early in the morning, if we understand what happened, an Air India aircraft was, after taking off from Bombay, was diverted to Delhi because it received a bomb threat mid-air. Following that, there were 2 more bomb threats that were received, and these related to Indigo flights. Now, all these 3 aircraft were taken to isolated bay, and all the standard procedures were followed. After that, Air India flight was rescheduled for tomorrow, and one of the Indigo flights was cleared to take off today. Till the latest information we had, the other Indigo flight was yet to be cleared by the authorities.
Right, Aditya, thank you very much for joining us with those details. And in a big move ahead of the Maharashtra Assembly elections, the state government has announced that light motor vehicles will no longer have to pay tolls to enter Mumbai. The Chief Minister Eknath Shinde made this an announcement of the waiver today, and this now comes into effect from midnight. NDTV Sujata Dwivedi reports from the ground.
In a major announcement ahead of the assembly polls, the Maharashtra government has announced a full toll waiver for light vehicles entering Mumbai or leaving Mumbai from the 5 toll booths leading into Mumbai. The toll waiver will come into effect from 12 a.m. tonight and applies to toll booths at Daisar, Mulund, Vashi, Airoli and Tinhat Naka. And these 5 big toll booths, as you see, that all the big vehicles leading to Mumbai come from these major toll plazas, and now it will be a toll waiver for all the light vehicles. Now, if we talk about the amount that is being charged for cars, it is usually 45 rupees for entering and leaving, which sums up to total 90 rupees. And for light vehicles like Jeeps, it is usually 75 rupees being charged from these vehicles. So this is going to be an important announcement that was taken during a Maharashtra final cabinet by the government, where Chief Minister Eknath Shinde announced that now it will be a big waiver for people who are entering from the light vehicles, and especially for commuters traveling to the city for work purpose or related to any of the business that they own. It is going to be a big relief for them as well. Now what remains to be seen is that whether is it going to be a masterstroke by the Mahayuti Alliance announcing a full toll waiver for people, and will it really convert into votes or not?
All right, now police sources have revealed that Zishan Siddiqui, the son of the slain politician Baba Siddiqui, is also on the Bishnoi gang's hit list. Baba Siddiqui was shot outside his son's office in Mumbai last Saturday. The shooters confessed to being hired to kill both the father and the son, attacking the former Maharashtra minister when they couldn't find Zishan. Now, 2 gunmen have been arrested, while a third, Shiv Kumar Gautam, is allegedly on the run. Police teams have been deployed in Haryana, Uttar Pradesh and Delhi to arrest the third accused, while the Mumbai police's anti-extortion cell is investigating the case. Zishan, a former Congress MLA, is now under increased security. Well, finally, Elon Musk's SpaceX hit a new milestone on Sunday by launching its giant Starship rocket and successfully catching the booster with mechanical arms at the launch site. The nearly 400-foot Starship lifted off at sunrise from Texas near the Mexican border. Unlike earlier attempts that ended in destruction, this time the rocket made it through both liftoff and landing as well. The moment was met with cheers as Musk announced that the tower has caught the rocket on X. Well, that's all we have time for right now on Profit 360. Thank you very much for joining in.